Okay, just let me know if you can hear me, guys. For some reason, still. G'day, Bobby. Am I coming through okay? Is the sound okay? Should we check? Yep, fantastic. All right. Another headset problem. It just does not like to connect to me. Got random things happening with my computer. It's getting a bit concerned. All right, let's get into it. Welcome to the morning playbook. It's the 13th of August. So we'll take a look at the action from overnight. We'll start with just the intraday action, which I'm expecting to see play out. Then we've got markets were strong again, um, basically on the back of stimulus plans. I think it's a case of get it as high as you can before you find out what's going on. Push the markets, or ramp them as high as you can. Buy the rumor, sell the fact. So even after they're having a few issues getting it through Congress, so there's still a deadlock. It's still a stalemate. And I can't say his name, but Munchkin is sat in the meeting, but he basically come out and said we probably won't get something through in the near term anyway, which the market's sort of brushed aside. They're still, pushing higher. So it looks like it's for me looking at those markets, looking at the US especially. It's I think it's more of a fact that the bears have been beaten down so many times. There's been so many reasons why you should sell off, but it hasn't, and they've been beaten up and chopped around so many times that people are giving up and waiting to sell when the market's actually moving down rather than trying to pick a top, which is probably, it is the wrong thing to do. Try to pick the top. You're trying to work off already established weakness rather than just try to pick tops. And it's the same on the upside. You don't want to just buy off a support zone. I mean, you wouldn't say the market's pressing down here. You would just buy here. You want to see something play out where you've got a high low, for example, something like this. You've got a high low, so you're on the right side of the action. So I think that's what's happening in the US. They've been beaten up so much that no one's willing to jump in short, which means there's no resistance to any move up, and the momentum's still very strong. So there's no other way but up at the moment until something can change that. And even if stimulus gets said, they talk about stimulus not happening potentially, it's still going to go up. So I think it's a good little stalling tactic from the US as well, from the government. Stall as long as they can without. So I think their aim is to not give out money as much and get people back to work. And if they start giving out more, $600 or something like they have to stick to that plan and more stimulus, then it is going to hurt the economy. It's going to weaken the dollar, which I probably feel like it's weak enough at the moment. So yeah, I think they're happy just to stall and coming into elections and look like they're trying. Yeah, look like they're trying to get and it's all the Democrats' problems. So funny stuff happening over the US. But either way, the market was up last night. Just lost my mouse. Come on, mousey, come back. Come back. Just 1 second there, guys. All right, so we've got the Aussie market. Looking for that level to be washed, 61.28. Expect that to be washed. There's some clear resistance up at 61.53. If we grind down, we're sort of at that zone where, look, it's been sold into and held, and it looks like the weakness of sellers is, or the selling pressure is easing up. Just looking at that CCI indicator, and you look at it, momentum potentially turning back up again. So if it's going to turn up, don't mind if we see a wash on that level first, and then start to hold. If we can hold that and hold a higher level, then it could be a move back up to 61.53 today and retest it. We'll see how that goes. We've got Hang Seng expecting, after that run up, that really strong run up last night, along with all the other markets, pretty much they all went and turned and rallied at the same time. We were talking through Discord yesterday about this and just looking at some long entries, even in the extended market. And it's, so that spike high, I'm expecting some sort of heat to come out of this action here. If you project this leg up, so this leg from low to high, before we had a decent correction, take it from low to high, it's still got some room to move, but I'm looking at a move up potentially 25,703. So if you're looking at, just that extension, that volatility extension, to take you to 25,526 for now, that's so close to that resistance zone. I mean, so close, 200 points away, but the 200 points can be done on the Hang Seng on the open. It moves so fast and hard. So I'll be looking for. I just want to see if this level can hold 25,270. If we can sort of hold, come into the open, and when it opens, you might get a flush of that, and see if we can hold a higher level I mean, you might get a flush, it chops around that zone, and it's looking like it's going to go down just to drag in some sellers and turn around and squeeze them back out in the rally. If we start to go, you're looking for the high low to work off. All right? I'm looking to the 5-minute charts anyway. This is the 30-minute chart. If we go to the Dow, I'd say the Dow would be contained between 28,013 and 27,852. I can't see that a reason why. It looks like with this little flush and retracement back below that level, back below the previous highs, looks like a bit of a setup. It looks like a setup short, and they might squeeze down. But what I would expect that's going to do is just the usual trick from the Dow, dragging some sellers and squeeze them back out as they ramp up into the open of the European session. There doesn't look like there's any reason why it should go down. Longer term, this rally has potentially come to an end, but again, the US session is just the US equity markets just want to go higher. So I think the Dow can do what it wants prior to that, and then it's going to open back up again. There could be some heat. I mean, the one thing I'm looking at is maybe is this longer term, if we start to break down through, I mean, if we do 27,852 into the European Open, you get a bit of heat coming out of the markets. They've been quite strong, especially Europe the last couple of sessions. US pulled back, Europe didn't move and rallied again last night. So they're quite positive. If that's the case, we might get a bit of a move down. So if you're just looking, say, that's the leg down. I don't want to do that. We just move that down from that high. You might see a flush through 27,633 down to the 27,500 mark. But we'll keep an eye on that. It depends whether or not this level can hold. And the market can do that. It's pushed down here. It doesn't mean just because it's broken this uptrend, doesn't mean that it has to go down. It could just consolidate and we start taking out those highs. We consolidate through here rather than a pullback. You just get consolidation of the highs and bang, up we go again. The S&P is gunning for new highs. It's only about 10 points off new all-time highs. With the market backdrop and everything that's happening, I read somewhere about insurance premiums in the US skyrocketing because, I'm just assuming it's because of everything that's happened over there, the looting and the stealing and the wrecking, the carnage that's going on, car insurance and all that sort of stuff. So the cost of living, you would expect, edging higher. Unemployment is not going down. It's probably going to go back up. US dollar, it's purely, everything's bearish. If they didn't have a stimulus, it's bearish as hell. The fact that they've got stimulus in the market is just chipping away at those highs is, for me, it's just continuing the ball rolling. So I think that's why I'm sort of expecting that level to hold. I mean, we've got to watch both sides of the market. If it starts to roll over and there's weakness coming to the European session, then we're just going to look for selling off lower highs. Now, the Nikkei, same sort of thing, had a good leg up. That busted through these highs at 22,630, busted through these at 22,940. That leg is extended. I'm expecting some heat come out, which is just open a bit weak at 930. So it has just broken through this zone. We'll just see if we can get this kind of action and see if we do. It needs to flush, and I think if it can flush coming in the European session and Europe's opens a bit weaker and then rallies again, we'll see. But that's, a couple of good legs up may mean this whole move is extended. And if you start to look at from this low to this high, it's probably, correction. Secondary leg up is extended. It may be not just that we're going to get this kind of action. Not going to get this kind of action and then into new highs. We might get a major lower high starting to play out. But we'll keep an eye on those. So if we go now to, what do we got? We're looking at the dollar index. It's the important thing. You can see the dollar index was getting sold down through the end of the Asian session, European session, sold down, got supported back into sort of these lows again, reacted off those highs. So you would expect that as you come back into this high, failed here, come back up to those highs, get a bit of selling. There's two things that's working on that, which I think for now is going to be contained. Everyone's expecting stimulus. We don't know what it is. They're talking it up, but they're at a stalemate. So I expected that will be capped on the upside at 94 on the index. So any sort of rallies into this zone, I think is going to be held. Okay, they're going to be selling back into that zone because there's no reason for buyers to step in if you're expecting another $1 trillion potentially of stimulus to come in the US dollar to be devalued further. All right, so that would expect some downside movement, but on the upside, maybe Trump's already shown his hand that he's not willing to do the $1 trillion stimulus. So there's less than what people expect. Remember, the markets factor in; they don't react; they factor. Okay, so they do react. So they're generally $1 trillion is factored in, and we're just waiting to see whether we get it. So the market's been in a bit of a holding pattern in the US dollar. It may swing between these highs and these, potentially push down to these lows. which is going to buoy the stock market. But I think all in all, yeah, it's going to be this wider range between 92.50 and this longer term support holding, and potentially this zone in here, somewhere around here holding as well at 93.22. So it might be sort of chopping around. We might, push back up to these highs. We'll just wait and see what happens. Gold. So I'm going to go over gold while I'm here. Talking about the US dollar. So everything's linked to the US dollar at the moment. And what's happening with stimulus. Gold, want to see if that can start to find some buyers. I mean, this for me, the fact that this was the US dollar drop, and as the US dollar was still falling, the market got buoyed at 19.50 on gold. Gold prices got supported, held resistance, held there. So maybe this is a flush and we start to build and we get a secondary leg higher back up to, say, that 1980 zone, or we just go straight back up to the new all-time highs. We'll have to wait and see. But this longer term, I think there's a big trend. This pushed right back down to support of the trend up, a trend line, higher lows holding. And this was the most recent high low around about that level, sticking to the trend line still. So we could get, if we hold below this level, we might get a bit of a push back up. We drag in some bulls and then squeeze them again. There's a lot of juice on the long side ready to be squeezed out still. So you can't discount lower prices just because, fundamentally, I mean, I know everyone likes gold and it's buy the rumor, sell the, not buy the rumor, sell the fact, but gold is a store of value. But I mean, really, I don't think it is. I mean, I don't really think, I think it's traditionally buy gold as a safe haven, but the only safe haven it's giving is futures prices. It's not because you're getting gold and you can put it in your vault unless you buy it physically, but then you're going to buy it at this price anyway. So I kind of find that a funny argument. But anyway, it is gold itself, 1950. That will be the key level. We start to press up and through. Okay, when you look from low to high, if this is the low that holds, low to high, pressing somewhere around 1980. Okay, so the dollar, you're getting funny movements on the currencies, which we'll just look at. The euro for one is obviously, it's just purely mirroring what's happening in the US dollar. It's not moving because of, as much. It's not really moving because of data come out in the European. It's not getting supported there. It's more, okay, if we get a big bounce in the US dollar, expect all these longs that have built up through here get squeezed out. You can see this consolidation around that 118, 119, 118, 50 area, these highs, and these lows. It's sideways movement. It's not bullish at this stage. If anything, we're getting capped now at 118, and we could see some bearish action back down to the support at 117 or so. It all depends on stimulus. This market's completely addicted to stimulus and what's happening with stimulus. So we'll just see if this can potentially, if it holds up here, I mean, if it drives up through there, then we're looking back up to these highs. And then you're just going to be swinging between highs and lows until that US dollar makes a move out of its range. All right, so if we just see there. So yeah, I would be looking for maybe, again, back to the US dollar. Why didn't that hold? All right, back to the US dollar over here. Don't know why it doesn't save it on both charts. You can see if this level holds and we start to get a rally, which it's open a little bit weaker, but generally they flush and go. We'll see if that can hold. If that's the case, flushes and goes, we've got a short opportunity on the euro. Okay, as long as it holds roughly around this zone, I would like to see it hold around this zone, at least below 118. If it can hold below 118 and we start to get a bit of seller pressure in, chop around here, we might get an extension lower. Even if it goes, through 117.77, we get down to 117.60, 50, will be, a couple of short-term, some short-term gains. But if we press back down and retest this zone, then okay, it looking pretty good. The Aussie is a chop fest. Might have to go over here. I think I'm drawing up here. There we go. Support levels on there. Bit of a chop fest. You can see longer term, it's had a big press up, pullback. Any sort of rallies has been met by a bit of selling. All right, it's not convincing. We got through this high. We just pushed through the high, had to sell off before we smashed higher. And then that there suggesting strength, and then bang, straight back down to take out these higher lows. Straight back up and just chip through these highs slightly before we had to pull back. Just chip through the highs again before we got this sort of corrective phase. This inside level is holding at the moment at 71.13, 14. Just keep an eye on that. Yeah, on the SPY. We'll see how that's open in a second. So I just want to see if this, I mean, this potentially, if this chops around, we might get the secondary squeeze out and then ramp back up. I mean, with the Aussie, it's who knows. It's just this choppy action is really tough to trade. You're trying to get those key levels. If you're just buying purely off, I mean, for instance, if you were going short up here and you were selling purely off that resistance zone, you've been chopped out. You maybe sell it again, chopped out again, with those little whips, those spikes through resistance and spikes through support. All right, so I probably won't trade it, of course, but we'll just see if something clearly starts to set up. Yeah, we'll jump in. We'll send out alerts. We'll see how we go. The pound, ranging again, same as the euro really, until that US dollar picks a direction. The yen was looking like strength, but we've got this potential breakdown. So that was sort of what I was looking at. Maybe that whole breakup, but instead we could get in some weakness, which is really just that leg up extended, pullback, extended that leg up, maybe extended back up into this resistance, into this area up here, 107.20. Might just need to take some heat out of that market. Bit of a shame we had a long in here, was looking good, tightened the stop obviously too far, got stopped out. Probably should have left it where it was originally at 68, would have held, and we would have been long still. Anyway, nature of the beast. SPY, let's just quickly look at that SPY. Come on. Now, so I've got a USB, and I've got it hooked up to two computers, so I've turned the Wi-Fi off the other one, or the Bluetooth on the other one, and the mouse gets stuck. All right, what are we looking for here? Just look at the SPY's opening. Nothing at the moment, so I would expect if this, so there's two things with the SPY. I mean, if it holds a level, it might sucker in a few buys and then slam down later on. Or if you sort of slam down through that level on the open, it might be, we're not going to get quite as strong open on the ASX, but it might just start to slam down and come into 5 past 10. It starts to rally back up again as the ASX starts to fully open. Right, so we'll just see. But I don't want to trade off this level until we get some sort of showing of a higher low, and it could easily, I mean, the market might easily flush through, bang, straight back up again. The SPY's been a lot harder to trade than usual because, I mean, look at this, looking for a strength here, pops up, straight back down again, chopping around. And that level there, you're looking into that level. On the 5-minute chart, I'm not really getting a short setup. I don't really consider this a short setup. A couple of candles up, and then it'd be nice to see if we can get a short setup. But it's just picking a direction. You can sort of see where it's going to go, but it's just a bit harder to trade without getting flushed out too many times. So that's why I've been favouring the Hang Seng during the day, which we'll see how that goes. All right, guys, I'll call it a day there. Thanks very much for joining me. Feel free to leave us a like on our YouTube channel. If you haven't subscribed there and leave us a like. It'd be much appreciated. And remember if you want to join in Discord, anyone that's got the alerts out, you should find the link on Discord to there. You just got to accept it, an invite from me. We'll be hopefully just talking up levels on Hang Seng and different intraday stuff on there. And also, if you haven't, obviously, just if you don't know anything about that, you don't get any of the alerts, send us an email to support@tradesetup.com.au. All right, guys, we'll speak to you again soon. Cheers, bye.